Let's talk about United Breweries and their latest quarterly results. The stock has just dipped below its earlier 52-week low, now at 1,098. For anyone who tracks brewing or consumer stocks, that's a standout moment. It puts the company in the spotlight for both value and cyclical investors looking for timing opportunities. Now, breaking down the Q1 numbers. UBL reported a revenue of 2,862 crore for the quarter, delivering a healthy 15.7% growth over last year's same period. Their net profit also moved up, growing 6% year-on-year to reach 183.7 crore. However, the margin picture is a bit mixed. EBITDA margin stands at 10.8%, slightly lower than last year's 11.5%. That's a signal that, while revenues are strong and the top line is growing in double digits, margin pressure still exists, mostly due to input cost inflation and some regional mix issues, according to management commentary. Share price is hovering right at the lower end of its 52-week range, at 1,798. The 52-week high was 2,299.7, so this is a notable drop. Dividend yield is about 0.5%, clearly on the lower side among industry peers, but UBL does have a track record of steady, reliable payouts, which long-term holders might appreciate. Looking at entry and exit, anyone eyeing a medium-term opportunity will notice that current prices sit in the ideal buying zone, between 1,780 and 1,820. The company's valuation, combined with its leadership in Indian beer, think flagship brands like Kingfisher and Momentum, in premium names such as Heineken Silver and Amstel Grande, suggest that patient investors could see upside if sector sentiment improves or margins rebound. For exits, the first realistic target is in the 2,000 to 2,150 range, but a sustained recovery or better cost control could push levels higher in the long run. What really stands out this quarter? Top-line growth is back in double digits, volumes are expanding, up 11%, and premium portfolio volumes have jumped over 40% year-on-year. Management highlighted that recent growth has been supported by volume gains in key states like Andhra Pradesh, Assam, and Uttar Pradesh, plus strategic pricing and product mix improvements in places such as Telangana and Orissa. Still, margin pressure remains a reality, partly from higher raw material costs and less favorable state mix. But management seems committed to cost initiatives, revenue management, and continued investment in their brands and supply chain. CapEx for the quarter was 136 crore, reflecting ongoing expansion and modernization efforts. The sector outlook remains positive, driven by demographic trends, growing consumer incomes, and increasing preference for premium beers. Management is optimistic about future margin recovery as operational efficiency measures and premiumization strategies kick in further. For investors, the fact that UBL is at a fresh 52-week low opens up an attractive accumulation zone, especially for those willing to ride out near-term volatility in margins for medium-term gains. In summary, UBL's current price action and solid operational performance, despite margin challenges, make it a case study in value entry with a cyclical twist. The combination of strong revenue growth, volume momentum, ongoing premiumization, and industry leadership means any margin bounce-back or sector re-rating could provide significant upside from current levels. Remember, this review is for educational purposes. It's not financial advice. Always do your own research and consider your risk profile before making any investment decisions.